I'm the Head of Treasury and Investor Relations. Thank you for joining the conference. First of all, we kindly ask sorry. Hello, and welcome to the earnings release call at TDC and DKT. My name is Henrik Hjortshøj Nielsen. I'm the Head of Treasury and Investor Relations. Thank you for joining the conference. First of all, we kindly ask you to mute your microphones during the presentation. If you want to ask questions during the Q&A, please write your name and organization in the chat and we'll return to you. An alternative is to send an email to investorrelations@tdc.dk. We will do the Q&A after the presentation. I have with me today Group CFO Lasse Pilgaard. Lasse will present the highlights of the quarter and then continue to take you through the performance of the group, TDC Net and New Day. Then we will open up for the Q&A. So please, over to CFO Lasse Pilgaard.
Thanks, Henrik, and sorry everyone for the first mistake in terms of muting us here from TDC, but please write in the chat if there's any issues regarding the sound so that we can see if everything is progressing according to plan. So with that, good afternoon and welcome to our Q4 2020 conference call. This is of course also the conference call where we'll talk a lot about our 2020 financial performance. Let us now turn to page 2 where I'll present the highlights from TDC Group in Q4 and for 2020 in totality. So all in all, I'm glad to say that the 2020 financial performance was in line with our guidance. We expected a flat to slight decline in Ebitda, and we realized an Ebitda 1.6% lower than 2019 for the full year. We also expected a total capital expenditure in the interval from 5.5 billion Danish kroner to 5.9, and we realized a number at 5.5, so in the lower end of the interval. We expected a leverage ratio of 4.1 times, excluding the new lease accounting principles, and we realized a leverage ratio of 3.7. So all in all, a satisfactory 2020. So if we focus on the quarter itself, in Q4 we saw an improvement in our commercial performance as well as continued cost savings, resulting in a stabilized Ebitda development in Q4 with a year-over-year growth of 0.4%. For the full year of 2020, Ebitda declined 1.6%. In Q4, New Day managed to stabilize the market share development significantly across the main products. This was achieved through an improving net add trend across almost all products. In mobile, we successfully increased the customer base in both consumer and business after having had large declines in the beginning of the year. This was the first quarter in 2020 with positive net adds in consumer, which was partly driven by the new brand Easy that was launched in Q3, but it was also driven by the launch of our national 5G offer, which we continue to have as the only operator in Denmark. For INN, the positive development compared to the first half of 2020 continued, and we saw continued traction within our fiber customer base. As for TV, the RGU trend is back to the levels we experienced prior to the first half of 2020. On the strategic side, New Day managed to sign 3 new utility deals in Q4 with Nordlys, Energi Fyn and Nord. These deals allow us to access new fiber networks and by that enhance our position as the leading provider of high-speed connections in the country. In Q4, TDC Net made great progress on its infrastructure investments across Denmark. We had our most productive fiber rollout quarter to date with more than 42,000 homes passed in Q4, bringing the total for the year at 123,000, which is more than double of what we rolled out in 2019. We also had a strong performance on high-speed broadband with positive net adds on both fiber and cable in both Q4 and for 2020 as a whole. On top of that, TDC Net completed the 5G swap this quarter, having swapped 3,800 mobile sites since Q4 2019 when we started the swap, making Denmark the first Nordic country to have national 5G coverage, and TDC to be the only operator in Denmark to have this national 5G coverage. Regarding COVID-19, the effects on TDC Group's financial performance in Q4 2020 related mainly to reduced roaming profits experienced by NewDay, which is stemming from lower traveling activity on business customers as well as lower revenue from tourists. As to our commercial performance, we are currently not seeing a direct impact from COVID-19. Customer payment behavior has not been significantly affected due to the comprehensive COVID-19 packages from the Danish government. However, we continue to monitor payments closely as well as the general development in the economy. Currently, Denmark is in a lockdown where many of our UC shops are closed, and of course, the longer time that will last, the more impact we could have on the business, but it's too early to tell. Before we proceed into the financial highlights, let me briefly touch upon our guidance and expectations for 2020. We expect slightly below to flat Ebitda. With that, let us turn to page 3, TDC Group financial highlights. In Q4, reported revenue decreased by 5.3%, which is on level with last quarter's growth. The challenges related to our TV business and derived effects on other core products have stabilized to normal levels. The revenue decrease continued to be mainly driven by TV, the DSL part of our internet and network base, and some decline in the landline voice area. In Q4, Ebitda increased by 0.4%, triggered mainly by extensive cost savings across the organization, which was partly offset by the decline in internet and network, landline voice, and to a lesser extent, mobile services. We saw an OPEX decrease of 8.7% in Q4, which is equal to 122 million Danish kroner. The improved operating expenses were fueled by strong cost savings activities in NewDay, as well across the other parts of the organization, especially, of course, TDC Net. This also shows that despite the recent commercial headwind and current COVID-19 that impacted the market, TDC's focus on efficiency supports the stabilization of Ebitda and will continue to do so. CapEx for the period decreased 2.5% to 1.6 billion Danish kroner. The expenditure is primarily driven by fiber investments and the 5G swap, which was finalized during Q4. The COVID-19 situation has not hindered our investment strategy significantly in Q4. I'll return to that on the next slide. So jumping to slide 4, we check in on OPEX and CapEx development. As mentioned in Q4, reported operating expenses decreased by 8.7%. The improved operating expenses were fueled by continuous focus on cost savings across the organization that has managed to significantly reduce FT-related costs as well as external spend and subscriber acquisition costs. In Q4, capital expenditure totaled 1.573 billion, a decrease of 2.5% compared with the same period last year, which is in line with our expectations. 2020 is the year where we managed to upgrade our network to 5G and become the first Nordic country to have this nationwide 5G coverage. Further, we continue our fiber rollout strategy as we see great potential in extending our fiber footprint across Denmark. We're still working hard and investing in splitting and renewing our critical IT landscape so that NewDay and TDC Net have the best possible foundation as independent market players. These programs are also progressing according to plan and is basically the last part of the separation that is running. On page 7, we check in on the financials of TDC Net. Revenue in TDC Net declined by 3.9% in Q4 year over year. This was mainly driven by declines in TV, of course stemming from the NewDay, but also impacting TDC Net and landline voice due to the phase out of legacy service provider on TV and a continued decline in landline voice. On internet and network, revenue increased due to ARPU increases from an improved customer mix with more fiber and cable customers, as well as revenue for speed upgrades in NewDay, which was partly offset by customer decline on DSL. Revenue and mobility services increased in Q4 year over year due to increased traffic. The revenue decline combined with an improved profit margin led to a small profit decline of 0.1%. Operating expenses in TDC Net declined by 1.3% in Q4 year over year, driven by continued cost savings related to the separation of TDC, partly offset by an increase in personal expenses resulting from an increase in FTEs. The decrease in TDC net's operating expenses more than offset the decline in revenue and gross profit, resulting in an Ebitda improvement of 0.5%. Capital expenditures decreased by 3% in Q4 due to efficiencies in production, as Q4 saw the end of the year-over-year effect of the fiber rollout and 5G swap, as it was running at full speed already in Q4 2019. These efficiencies are most notable in the fiber rollout, with TDC net now able to roll out more fiber at lower cost than in 2019. Q4 was TDC net's most productive quarter to date, as mentioned earlier, where we passed more than 42,000 homes passed, with a total of 123,000 for all of 2020. Moreover, TDC net also finished the 5G swap, with having swapped 3,800 mobile sites across Denmark. Let us turn to page 9, where we'll go through NuDay products and performance in Q4. As mentioned earlier, NuDay saw commercial improvements in commercial development in Q4, and as a result, the market share development across the main products were almost flat compared to end of Q3. In Internet and Network, gross profit in Q4 decreased by 6.1% in consumer and 7.6% in business. The main driver was declining customer bases in both segments compared to the same period last year, and the decline was primarily driven by the DSL technologies. The RGU development in Q1 and Q2 plays a large role here, as customer losses improved in both Q3 and Q4 compared to the first half of 2020. The negative development was partly offset by higher ARPU in consumer due to the price increases and speed upgrades. And of course, one of the big focus areas for 2021 will be on integrating with utilities so that we can migrate the DSL customers directly to fiber and hence not see similar RGU losses during 2021. On our NuDay broadband market share, came in at 41.4% in Q4, which is compared to 42.1% last year. And again, that is primarily driven by the migrations away from DSL to competitive fiber. Same story as I just mentioned, that is the fiber that we need to get access to so that we can migrate to those technologies. Going forward, NuDay's presence in the fiber market, of course, should be strongly enhanced by these partnerships. And in the long term, of course, we do expect to have stable market shares on broadband. Mobility services. In mobility services, gross profit decreased by 4.6% year-over-year in consumer and 8.4% year-over-year in business. The decrease were driven by lower customer base compared to last year, but especially also due to the continued negative impact from COVID-19 on roaming activity, which was a large driver of the negative development in business. On the positive side, compared with last quarter, we experienced significant improvements in the customer bases in both segments, where consumer had positive net adds for the first time in 3 quarters. Easy contributed to the positive net adds and is performing according to plan. However, also UC and Telmore have seen significant improvements during the year, especially on the backside of the 5G launch. We also succeeded in increasing consumer ARPU in the period due to price increases. As a result of the increased customer bases in both consumer and business, we managed to increase our mobile RGU market share from 38.1% in Q3 to 38.2% in Q4. On TV, our TV business, gross profit declined 3.8% year-over-year in Q4, which was driven by the decline in customer bases, to a large extent compensated by lower content cost. The impact from the customer base loss in the first half of 2020 carries as a run rate effect into Q4, as the RGU net adds development improved substantially in Q3 and Q4. The gross profit margin was improved in Q4 on the back of price increases on a range of legacy TV products, as well as lower level of content costs compared with the same period last year. Even though content costs in Q4 were lower compared to the same period last year, we continue to pay attention to the inclusion of streaming services in our TV packages, investments in content, and costs associated to our own TV channel C, and these investments serve our vision of delivering first-class entertainment and flexibility for our customers. We experienced a small decline in overall TV market share in Q4, where we went from 51.2% in the previous quarters to 50.8% in Q4. On landline voice, gross profit declined by 13.9% year-over-year in our consumer division and 9.2% in business year-over-year. The main driver is declining customer bases in both segments in line with the market development. On page 10, we check in on financials of NuDay. Revenue in NewDay declined by 5.6% year-over-year in Q4. This was driven by revenue declines on the back of lower customer bases compared to the same period last year. The decrease in customer bases was partly offset by higher ARPUs in both consumer mobile, internet, and network. This was primarily driven by price increases and speed upgrades, respectively. The revenue declines can, to a large extent, be attributed to the extraordinary high loss of customers in the first half of 2020, and these declines carry a run rate effect to the following quarters. However, the development in customer bases have improved towards the end of Q3 and Q4, and as mentioned, we successfully increased the mobile customer base in Q4 for the first time in 2020. The revenue decline was the main reason for the 12.4% decline in gross profit in Q4.
You're on mute.
Sorry, you can't hear us?
Yes, we hear you.
Okay, thanks. Must have been someone who couldn't hear us. That's good. I'll continue. The operating expenses in NewDay decreased significantly compared to the same period last year, with an improvement of 20.1% year-over-year in Q4. In Q2, NewDay implementing a new operating model through Enterprise Agile, and the transition of the organization continued in Q3 and Q4, where personal expenses were reduced compared to the previous period. Further supporting the positive development were significant reductions in acquisition costs, while the general cost focus across NewDay supported the year-over-year improvement. These events led to an Ebitda increase of 8.2% in Q4 year-over-year, or 32 million higher than Q4 of last year. A much better development compared with previous quarters of Ebitda decline, and partly driven by the stabilization of customer net add trends, which will continue to be the main area of focus going forward. On page 12, you find the leverage table for the TDC group. TDC's net interest-bearing debt of loans, bonds, and cash was 20.9 billion Danish kroner and respectively 31.6 billion at DKT holding level. Liabilities due to mobile licenses and the effect from IFRS 16 on leases were 5.7 billion Danish kroner. Leverage at TDC AS, excluding effect from IFRS 16, increased with 0.1x to 3.7 times Ebitda from September 2020 to December 2020. The leverage of DKT Finance Group was 5.5 times Ebitda. So summing up, in Q4 2020, we saw an improvement in our commercial performance across all main products, as well as continued cost savings, resulting in a stabilized Ebitda development in Q4 with a small increase of 0.4% year-over-year. Ebitda for the full year declined by 1.6% and was within our guidance of flat to slight decline in Ebitda. And now over to Henrik Hjortshøj Nielsen, who will moderate the Q&A session.
Thank you very much, Lasse.